These workers are braving summer temperatures of over 40 degrees Celsius in western India, putting up rows of solar panels and giant wind turbines. This dusty and once barren salt desert is set to become one of the world's largest renewable energy parks, 5 times the size of Paris. This is being developed by India's biggest coal importer, the Adani Group, as it tries to align itself with the Indian government's climate goals. Tasked with meeting this challenge is Sagar Adani, nephew of Indian billionaire Gautam Adani. Though still in his early 30s, he's already spent nearly a decade at the Adani Group. As part of a succession plan envisaged by his uncle, Sagar is now in charge of the group's lucrative but contentious energy business. He also oversees finance for the whole group, which means he's well placed to answer the many questions investors still have about allegations made against the group last year by short seller Hindenburg Research, which the Adanis have denied. Bloomberg's Anto Antony put those questions to Sagar in this exclusive interview.
When the Hindenburg report happened, a $150 billion wipeout happened in the group's wealth or the family's wealth because the institutional shareholdings in these companies were very low, I am assuming. Is there any other reason which you can think of?
So that is a perception that is very different from reality. So of course at that point in time, I would say that this report came as a shock to many people who were not expecting anything of this sort. From our viewpoint, purely this report was nothing but accumulation of everything that was written and alleged over the last 10 years before that, but also very beautifully gift wrapped and presented in a way that was, explosive and shocking, so to speak. So at the end of the day, if we are able to deliver our business in a consistent manner, after the Hindenburg report, right, we delivered the best results that the group had ever delivered in the history of the group. As far as institutional shareholding goes, people don't understand this, but we probably have some of the most diverse institutional shareholding, long-term equity in our portfolio compared to any other global businesses, or certainly most of the businesses domestically. We have long-term players like QIA from Qatar, sovereign wealth. We have sovereign wealth funds that participate with us. We have strategic equity partners who participate with us, Total Energies of France. We have a lot of other smaller institutional participants in our ecosystem. We have corporates like IHC, which are some of the largest companies in the Middle East who participate together with us. We have participants in our portfolio and our platform across every single type of investor base that there exists in the world. So yes, there were concerns. We sat down with our partners, we explained to them in terms of what we actually do, what the real factual situation is. And once they understood, they were comfortable. And those same partners who there were allegations that they were worried they don't participate with us anymore, strategic long-term global equity partners, they've only doubled down since the Hindenburg report came.
If I'm looking over the last 5 to 6 years, we see a 20 or 30-fold surge in the group's market cap. What explains such a huge premium for infrastructure companies? What are you offering investors here?
So today, you look at it as a significant premium for an infrastructure company. We look at it from our perspective as these infrastructure platforms available for investors today at some of the lowest valuation multiples anywhere in the world. So us knowing the company's growth path, knowing what we're executing on already today with our known projects and our committed investments, over the next 3 to 5 years, the growth that every single one of these companies will have will means that investors participating in our listed companies today have access to this opportunity at some of the lowest growth adjusted multiples anywhere in the world. So we look at it the complete opposite way as what the perception of yours and market perception is. But overall, ultimately, what are we offering to the investors? We think that we have a once in a generation opportunity of investing significantly in the type of assets that have long-term 35-year, 40-year stability. The assets we invest in, ports, roads, airports, railways, renewable power, thermal power, transmission lines, distribution companies, data centers, all these assets are long-term assets.
Why are the analysts not able to understand your business models? For instance, if I'm looking at some of the Adani Group companies, there is absolutely no analyst coverage or just one or two analysts are tracking it. Where is that disconnect coming from?
So always, whenever you see analysts in the context of the country, they have never seen before a platform of infrastructure growing at the speed that we have been growing. There has always been a mindset of, analysts have many times covered various companies, right? Government companies, infrastructure. There's no other private large infrastructure platform in the country. So analysts have been looking at various other companies where there's a 10%, 20% year-on-year growth, quarter-on-quarter growth. Many times the investors that they cover are also investors who are quarter-on-quarter, 6 monthly, year-on-year investors. We don't offer anything to our investors on a quarter-to-quarter basis. Our assets are 30 years, 40 years, 45 years. So our target investors are not ones that look at quarter-on-quarter results and determine investment potential. Our target investors are ones that look at a 10-year horizon, 20-year horizon, 30-year horizon. And analysts in India have historically not covered that. When I say all this, we also recognize that it's our duty to make sure that we engage with the analyst community much deeper, much stronger. We're already doing that. So you will see that a lot of analyst reports have come out over the last year and a half, which were not there earlier. Global companies like Cantor Fitzgerald, some of the top investment banks in the US, Jefferies, many of the Indian analysts, Sunidhi, Ventura, they've all started to cover us, which they did not a year and a half ago.
There is a long-running allegation against the group that the family is holding much higher stake than it is disclosing through overseas entities, and the real public float of the company is lesser than what it claims to be. How do you address that concern?
See, such stupidity does not even deserve an answer, to be very honest with you. For us, we're working in a regulatory context of SEBI in a market like India where everything is fully publicly disclosed. These allegations have been there over last many years, many months. Every single regulator of multiple jurisdictions has looked at everything multiple times and has found nothing.
And if I may ask, the US DOJ investigation, which has widened of late to figure out whether group-related entities or people have paid some bribes in India. This is a news that Bloomberg had reported. Now, this is a business which comes under your purview. Do you know anything about this?
So we, as a company policy, don't typically respond on legal or quasi-legal matters. We made a public statement about this overall anyways, that if there is even an entity that looks at it, it's in due course of their regular business and their regular interactions. So there's nothing specifically in particular that we have to disclose to the market that's separate or in addition from that.
There seems to be widely held perception that the group's fortunes are very closely tied to Prime Minister Narendra Modi's. How do you address this concern?
See, I think there is a very strong difference between perception and factual reality. People's perceptions beyond a point we can't do much about, but if you look at factual reality of what we've done across the group, right? Majority of our growth period as the Adani portfolio of companies in the Adani Group overall has come prior to the, if you look at pure, growth of businesses, growth of assets, growth of cash flow, a predominant foundation of that, majority of that has come prior to the time of Prime Minister Modi. Even today, when a certain party is in power, we work in 22 different states all across the country. Most of those states, many of those states are non-BJP states, right? Ultimately, what people don't realize outside is that from a business perspective, most of the businesses is done in the states, not in the center. Most of the action, most of the growth, most of the assets, most of the concessions happens at a state level, where there is regional parties, where there's opposition parties, where there's the same party as the ruling party in the center. And we work across all different political parties because the thing that we fundamentally do is infrastructure. And for that, an alignment with the objectives of the government is very, very important. And that's the fundamental success story that we've had over the last 30 years, not the last 10 years that Prime Minister Modi has been in power. It's fiction or a fairy tale that a company can grow so big in 5 years or 10 years. Nothing like that exists anywhere in the world.
Are there any specific plans to phase out the coal business in line with the targets which government has set? Any specific plans or any specific timeline?
So we will of course follow the government's guideline in terms of what the country needs. So in sync with that, whatever we need to do, we will do. But of course, our predominant focus is on renewables, is on sustainable energy. And with a significant push towards that, whatever we do with other sources will be a very, very small proportion of the larger context of how we invest.
So in line with the government's current projections and roadmap, what is the timeline within which you are looking at phasing out the coal?
So government's looking at a gradual ramp down until 2060. So we have a lot of assets where we have PPAs. And we have obligations in which we have to supply to various state government discoms, central utilities, and to many discoms and to the end consumers ultimately. So those obligations, contractual obligations, of course, have to be met. Our thermal platform is completely ring-fenced. It's completely independent. So with the cash flow that that company generates, that company takes its independent call with regards to how it wants to invest its own cash flow. Some of it they'll use for growth, some of it they'll use to distribute. But again, all of those plans are going to be dependent on the demand profile of the country. So ultimately, if there is a significant demand further, if the country requires it, if the people require it, and if the government requires it, that company will make its own call. But from a family perspective, when we look at a larger investment portfolio, whatever the thermal and the fossil fuel business does is going to be a small proportion of our investments in the entire sustainable value chain.
Once Mr. Gautam Adani steps away, we wouldn't have anybody who can take a final call on things. It's a joint decision making from what I understand. How will that work out?
So already there is a very, very close interaction between all the, so to speak, G2 members. We have our regular meeting cadences. We meet in a very structured manner once every week. We make sure that all important decisions are all socialized, are all discussed jointly, and there is, in different aspects, different people take leads, but everyone's views are always incorporated in however we do everything. So that's something that we have already been practicing over the last about year and a half, and that's something that's becoming deeper and deeper and deeper as we move forward.